Hey everyone, so this is how I set up the framework prior to me trading every single day. All right, I basically have 7 points, 7 things I do that I'm looking to mark, analyze before I trade every day. And again, this is using ICT concepts, but I feel like these 7 things I need to set up the framework for my day. And from that, after I have the framework set up, that is basically my analysis. And that gives me the confidence on what I believe the market should do, where it should go, and how I'm going to trade and where I'm going to look for my trade. All right. So the first thing I do when I set up, I open my charts, I clear out most of my levels. I clear out almost everything, except for if I have something marked on the daily chart, and that might not change from day to day. Okay, so I leave it there. So the first thing I'm going to do here is I go to the daily chart. The daily chart, I'm looking for highs, lows, fair value gaps, or if we had any kind of market structure shift on the daily chart. With a fair value gap, basically a setup, but on the daily chart. Because the setups, everything is fractal. What you see on the daily chart, the 1 hour, the 15 hour, it's all fractal, meaning it works the same on every time frame. If you see, a market structure shift, a fair value gap, then it works no matter what time frame it is, just higher level. Okay, so immediately, let's see. It's showing Tuesday, but what I do is I'm going to go here. So for example, it's the daily chart. I'll notice this daily fair value gap here. So I'll mark that out. I have my templates here all set up. So I'll just hit the daily fair value gap. I'll mark out some obvious ones. And like I said, these won't change, right, from day to day. So I'm just using a clear chart for the purposes of this video. But I'll typically leave these on, like here. And once you're really good at spotting, you'll spot these a lot easier. But you can see here, price made its way up. It came right down almost to the middle here. Consequent encroachment came up right to the top here, came up, wicked through. But look at the bodies; they stayed above. So this was a key area here, right? These were great longs. Imagine taking longs from here. Those are high probability setups. Same thing. Price came, left this one, just run away. It's just ran away. Left another one here. So I mark these out because later down the road, when price comes back down into this, I'll use these as potential long entries. If I get, if the framework presents itself to give me a long, either off the top here or at the middle here, then those to me are A+ setups, okay? And vice versa, if it was, to the short side coming back up into it. So that's the first thing I do. I look for the fair value gaps, or if there was ever a market structure shift in fair value gap, let's see. Like here, we have this fair value gap where it came up, right? Price was on its way, or right here, perfect. Price was coming down, came back up, down, and then so we have a swing right here, right? That's going to be a swing because the left and the right's below this point. Came back down, and then what do we have here? Went through the swing, left a fair value gap right there. So immediately when this happens and this bar closes and we have this market structure shift in this gap, this fair value gap, now I am bullish, right? I'm expecting price to continue up. Where? Well, probably to take all these highs here. Okay, so sure enough, it took all the highs and it's it just keeps going. Okay, so when am I going to really be bullish for the long term? Well, once we get another market structure shift to the downside, this same thing, but in the opposite, then I'll believe we're going to be bullish. Okay, So even though we're in bearish, then I believe we'll be bearish. But even though we've been in a bullish run here, pretty much most of May and June, obviously you're going to have days, down days. So if you're bullish, so these down days are there's either not going to be a setup for you, or you may take a loss, or on those days, you have to have the framework where you take a smaller trade, okay, until you're bearish. So, but I take both. I mean, you could take both. So this is just the higher time frame. This is what I do. I look for that. So at the moment, there's not really anything else to look for on the daily chart. I'm just marking the fair value gap here. And then what I do is I mark my high and low for the previous day. So here I would mark a high. Okay. And then the low of the previous day. So I mark that. Now, I'm not going to really get into too deep of how to use all this. That could be another video, but that's more along the lines of actually knowing the ICT, the entire model, basically the whole 2022 mentorship or whatever model you're using. You have to know all of that at that point, but I'm just going to show you these here, not necessarily exactly how to use it all in this video. So I marked the high, the low of the previous day. Okay. So that's here, number 2. Daily chart, mark the high and the low of the previous day. Then I'll mark the London session, the high and low. So for that, I'll go down into the 5-minute chart. Let me go here. So let's go back a day right here. So to make it easy, you could put some vertical lines if you want. I'll go to 155 right there. And then I will go to 505. So that way I can see the 2 a.m. and the 5 a.m. bar. Then right here, I see my high. I'll mark that as my London high. And then I see my low. Mark that as my London low. Okay, pretty simple. Get rid of the vertical lines because I don't like the clutter. So pretty simple right there. Got the high and the low of the London session. And if you look at this, just look at this. You can see this is kind of an accumulation right here, right? Then you have a little manipulation down, and then your long run. I took this trade right up to here, but look how it just ran all day. Wow. Okay, so anyway, so I'll mark that. And then let's go back to here so I can find my list. Okay. Here's my list. Mark the London session, high and low. And then I check the 15-minute chart for any equal highs, equal lows. Actually, let's do this. Okay, let me get rid of this. This is in the way. It's trying to be cool. Instead of marking this high and low, we're going to go ahead and mark this as if, because right now the time is 1 a.m. Eastern time that I'm making this video. So I'm going to mark the previous day so I could show you what it looked like for Monday. All right, so then we're going to drop into the 15-minute chart here. Yeah, that there. So the 15-minute chart, we're going to looking for the equal highs and lows and fair value gaps. Okay, basically the same thing as the daily chart that I mentioned. Now, the reason why we're doing this as well, though, is because we're looking for buy side and sell side liquidity. Okay. So we didn't have it. We had it basically like this because here's the time down here, 9:30. Here's the open. So previous to the open here, I'm looking. This is the 15-minute chart. You have to look at it as if it was like this, because this is 9:30 bar right here. So we don't know it ran up yet. Okay. So we have here basically all these relatively equal highs up here. Okay, this is going to be my buy side liquidity. So I'm going to mark that buy side liquidity. Here I just throw that there and mark it buy side liquidity. And then I look for the sell side liquidity. And what I noticed right away, look at this low right here. This wick. There you have some relatively equal lows here. Okay. So this is what I marked as my sell side liquidity. And then what do I have here? Well, I have a fair value gap. I'm going to mark that because that's still standing there. There's no, it hasn't been closed. It hasn't closed through it. Okay, so now I have kind of a support here. You see, I have sell side liquidity. I have this 15-minute fair value gap. And then if you look here, here's a 15-minute fair value gap too. I just mark it just to see what it does before, as I'm kind of trying to make this framework, put this framework out. And then I see a fair value gap here that it hasn't quite closed, but it rebalanced it basically, and that's buy side liquidity. So if price does come up, I believe it would just shoot up through it. Okay, so I wouldn't really necessarily need to mark that. And then, so I do that. Okay, so I have that for now. Let's go back to here. What else do we have? So we do the same thing on the 1 hour and 4 hour charts. Okay, so let's take a look at the 1 hour first. Okay. Here was the 1 hour. Right here, before price rocketed up. And what do you have? Yeah, you got a lot of equal highs here. And then here, yep, I could see see those lows here. Well, this is really a wick here, but what do I have here? I have a fair value gap right there as well. So I'm going to mark that. It's basically the same as that 15-minute one. So a higher time frame, that's even better. So then what I'll do is I'll just leave the higher time frame one because it's going to be stronger. So I'll just leave this 1 hour. Mark that. And then don't really have much else here at the moment. Yeah, not much else there at the moment. Let's go to the 4 hour chart. So if we look at the 4 hour chart, we have that at the lows, the previous day lows was Friday. You kind of have that there. So if price does keep going down, well, it may go here. Then we do have a 4 hour gap right there. So you can mark that just in case price does go down. You know what it's reaching for. And then from here, there's not much else. Okay, not much else. So let's go back to the daily chart and see what else we have to look at. Okay, from there, I marked the opening range gap by changing the trading hours to regular trading hours. Okay, so I go to the 5-minute chart and basically I switch here from electronic trading hours to regular trading hours. And I see if there's an opening range gap from right here, for example, from the market close the day before at 1610 right there to the open at 930 bar when that closes. So that's going to be an opening range gap. I typically will mark that. Okay, so I have my opening range gap. I mark that, the high, the low, and then I mark the middle. So what I do is I'll take the fib and I measure it, and then I'll mark the middle right there. Wherever that middle is, I'll mark it. Now I have my opening range gap, the high, the low, and the middle. And for example, if price opened high like this and created this gap to the long side, I want to see it trade back down to the middle and then eventually close it. Okay, so I mark that. I'm going to erase it because there wasn't one for the day that I'm showing, so I don't want to get things confused, but I do mark that always. And then from there, I mark the 8:30 opening price. So let's go back to the 15-minute chart here. And we'll zoom in. Back to where we were here. Let's see, where were we? Monday, 10:30. Okay, right here. Okay. So here was Monday. So then I'll go and I'll mark, 8:30. Oh, I need to change it back. Sorry. It's regular trading hours. I was like, why is that looking different? So I go to 8:30 right here. And then the open is right here, 974.50. Boom, I marked that. I have my 8:30 opening price. There we go. And that's all I'm marking. So now I have a framework lined up, right? So I have the framework. And so I can mark this gap. I think on this day I had this gap marked as well. And you can see, look what price did. It went right into it. So now I have a framework and I can say, well, I have a buy side liquidity here, sell side liquidity. If I am bullish for the day, if I think price is going to go up, then what I want to see is price, the 8:30 opening price, I want to see it go down. I want to see it open and go down. And then if I have a reason or somewhere that price should sweep, from there, I look for a long entry to go up through buy side liquidity. And that's exactly what I did on this trade. But that's, like I said, I'm not going to get into specifics on how I trade it or what I look for. But those are the 7 things how I frame out my day. So I look for those, for price to do a draw on any of those areas that I drew out, whether that's a fair value gap or sell side liquidity or buy side liquidity. And then I have a target and I look for it to go the other way. So I measure out the dealing range. I look for a trade entry into, from the discount or premium. And that's what I'm really looking for. So I just mainly wanted to show you how, what I use to draw out, basically to have my framework drawn out. And I do this every single day before I trade. These 7 things, and I analyze it. Now, if you don't know the concepts or know how to trade this, you're gonna see these things and it's not gonna mean much to you, right? You're just gonna have some lines on your chart and things like this, and you're not gonna know how to use it. So you still have to go through the ICT mentorship on YouTube. And if you have, though, and you're already trading ICT, maybe this will help you. This is how I frame it out. And when you see this, then you see my trade reviews, it'll make a lot more sense of my thinking anyways on how, what I'm looking for in the markets. So anyways, just wanted to share that with you. I hope this helps. Hope you get something out of this. And yeah, let's have a great week. And as always, trade well, everybody. See you later.